Our next guest predicts treacherous market activity will pave the way for a violent rally in February. Tom Lee runs Fundstrat Global Advisors, is the CNBC contributor. Tom, always good to see you.
Yeah, great to see you, Melissa.
So January was rough. You thought January would be rough, but you didn't think it would be this rough. Is the flip side to that you think this violent rally in February will be even stronger?
Yeah, the setup looks like the V for February is not Valentine's, but violent rally. And I think there's a couple reasons for that. One is that we know retail sentiment got so negative that it was the worst since 2013. But the last 6 times it was this negative, 6 out of 6 times the market was higher 3 months later. So I think we're in a easy sort of risk reward for the month of February. The second is retail cash. We're going to talk about this with our clients tonight, but if you look at retail money market cash from ICI, retail investors basically assumed a bear market was starting. So they've raised so much cash in the last couple of months that we're essentially resetting a risk-on rally. And the third is, I mean, this is anecdotal, but I've been at a couple conferences over the past week. I didn't find anybody bullish. So I think when institutional investors are cautious, retail basically priced in a bear market and their sentiment's the worst in 8 years, you could have a huge rally. And as we've written before, recoveries from a fast sell-offs actually typically are symmetric, meaning you should expect a violent rally.
Tom, it's Karen. Thanks for coming on. We always appreciate having you. We know we like acronyms here. Yours is BEEFF. One of the Bitcoin is part of it. How do you see, when you say Bitcoin, are you using Bitcoin itself or are you using cryptocurrencies in general? And where do you think Bitcoin's dominance in that spectrum is?
Karen, that's a great question. When I talk about Bitcoin in that acronym, it's really crypto. But I think Bitcoin, Ethereum, and really a couple other layer 1s blockchains are important core holdings. But the reason I use Bitcoin is it's the most liquid. I think it's also the safest from a regulatory perspective. And we know that in February, there may be some executive order coming from the White House, and I think that might make Bitcoin look a lot more appealing.
So, Tom, speaking of these sort of V-shaped bounce backs, we were just talking about the ARK Innovation ETF, and I'm wondering if you also see the sort of violent bounce back for these names that are just absolutely bombed out. And I know you're not an individual stock picker, but names of this ilk.
Yes, Mark Newton, our technical strategist, actually last week wrote about how he's been watching ARK, the ARK ETF itself, and thinks that it's making an important bottom. So I think the next couple of weeks will be really insightful, but it does look like the ARK bounce needs to be respected, and I think it's going to be part of that V-shaped violent rally.
All right, Tom, we got to leave it there. Thanks so much for joining us. Always good to get your perspective. Thanks. Tom Lee of Fundstrat. BEEFF. It's funny, but it's very catchy, and B is much better than putting the C for crypto. CEEF is not that catchy guy. But do you like that? Energy, financials, those are the other letters.
I love energy. Listen, I'm not going to get into the Bitcoin thing, but having been cut in half and seemingly found a bottom at a prior low that we bounced from, Bitcoin makes sense. But energy to me makes a lot of sense. And, we've talked about it, I think, for a while. We had Paul Sankey on a month and a half ago. I think people underestimate how high crude oil can go, and then subsequently the underlying stocks. And if I'm not mistaken, I think energy was one of the better performing sectors in January. I think that's going to continue. And I understand what Tom is saying. By the way, Tom was the one that a month and a half, 2 months ago, said to be cautious into this period of time. So if he says we're going to see a knee-jerk rally, I'm not going to stand in his way. I just think there's going to be more volatility prior to that.
Bono, and would you buy into this notion of this sharp, violent V-shaped rally?
As a trading position, yes. I'm still a little bit cautious in terms of waiting. The Fed has said that they're going to be data dependent. I think we need to be data dependent as well. So for a trading position, certainly. But aside from that, I'm still a little cautious.